Express Series, English for Accounting, by Evan Frendo and Sean Mahoney. Published and copyright Oxford University Press, 2007. Unit 1. Exercise 2.
Mr. Martins will be with you in a moment. He's just finishing a phone call.
Thank you.
Would you like some coffee?
Yes, that would be great. Milk, no sugar, please.
Here you are.
Thank you. Is this the whole department?
No, not at all. On this floor we have the trainee accountants and the bookkeepers.
Uh-huh. And does everyone work in the open plan area?
No, some of the managers have individual offices. The two big offices on the left are for the company treasurer and for our senior tax accountant.
Ah.
The offices on the right are for our cost accountant and for our budget manager.
Mm-hmm. And the office in the corner of the open plan area?
That's used by our back office manager.
Ah. And you have offices downstairs as well?
Yes, that's correct. Downstairs are the internal auditors, and at the moment we have a team of external auditors. They're in one of the conference rooms at the end of the corridor.
Oh, I see.
Unit 1. Exercise 3.
Ah, Mr. Martins. This is Michael Rogers.
Ah, yes. Hello, Michael. I'm Paul. It's nice to meet you. Sorry to keep you waiting. Please come in and take a seat. Did you have a nice flight?
Yes, thanks, Paul. Finding the office was a little more difficult, though. I'm glad so many people here in Brussels can speak English.
Oh, yes. We're very international here now, but that's not a bad thing, I must say.
A little cultural mix is good, isn't it?
You're absolutely right. Would you like to start by telling me a little about your experience, Michael? Your CV is very impressive. And then I'll fill you in on our group and the particular requirements we have for this position.
Yes, that's fine. I guess you know from my CV that I studied economics in New York.
Unit 2. Exercise 12.
Morning, Charles. You wanted to see me?
Yeah, hi, Sally. About our board meeting next week, you know we'll be discussing our debt problems.
Of course. Probably our biggest issue at the moment.
Right. The shareholders are getting nervous and the markets don't like our level of gearing. We're getting more and more questions about whether we can service our debt in the long term. It's getting harder to attract new investments, so I wanted to speak to you about what we can do. We're investing a significant amount in our new factory in Germany, so we need to come up with a solution soon. The new factory is very important and we're looking at leasing the assets, and that's where you come in. Tell me what we can do with leases on the balance sheet. What's allowed in this country?
Is this a business decision to lease these assets?
Let's just say it's one possibility we're looking at.
You're thinking that if we lease the assets, we can exclude these liabilities from the balance sheet?
Exactly.
You know that the auditors will look very closely at these transactions. The accounting standards, or principles if you like, mean that finance leases must be disclosed. If we are effectively the owner of these assets, then we're not going to have a choice.
And how do we determine the owner?
That depends on the conditions in the contract.
That shouldn't be a problem. And then we can call them...
Operating leases. But remember, auditors and the markets are now very sensitive to these things. We can't afford to be seen as trying to mislead anyone.
Of course not. But for the meeting next week, have a think about it, OK?
Yeah, I'll try and bring some ideas.
Great. See you later.
OK, bye.
Unit 1. Exercise 15. 1.
He'll have paid his debts off by next year.
2.
Look at the assets and liabilities on the balance sheet if you want to know how the company's doing.
3.
Many developing countries are burdened by heavy debt.
4.
We need to look at the long-term liabilities before we think about any major new purchases.
5.
The partnership has limited liability status.
6.
Current liabilities are those which are paid off within a year.
7.
The company's in debt to the tune of 10 million.
Unit 2, Exercise 4. C. 23.56. C. 10,001. B. £63.30, or D. £63.30. C. 5,400,342. A. €45,638. A. The year 1999. Or D. The phone number, room number or other figure 1999. B. The phone number, room number or other figure 2003. Or C. The year 2003. Unit 2, Exercise 7.
Okay, Norma has asked me to go over some of the ratios I used in the report which I sent you last week. The first of these is on page 3, working capital. Everyone got it?
Yep.
Okay. Working capital is quite simple. It's the current assets divided by the current liabilities. Any questions?
Yes, well, what's it for?
Well, it basically tells us whether we have enough short-term assets to cover our short-term debt. If we don't, we could be in trouble. Okay? Good. Next is return on assets. This is net income plus interest expense divided by total assets. Before you ask, it allows us to evaluate the way we use our assets. It can help us decide whether or not we should start a new project, for example, by comparing the return expected against the normal borrowing costs. Is that clear?
I have a question. What's debt-asset ratio?
I was just coming to that. It's the total assets divided by total liabilities. It tells us what proportion of the enterprise's assets are being financed through the use of debt. If this ratio is high in a market with increasing interest rates, creditors are going to get worried. The debt-asset ratio determines the funding leverage of the enterprise. Okay? If there are no questions, I'd like to move on to the next.
Unit 2, Exercise 10. 1.
Norma has asked me to go over some of the ratios I used in the report.
2.
Everyone got it?
3.
Before you ask,
4.
is that clear?
5.
I was just coming to that.
6.
Okay? If there are no questions, I'd like to...
Unit 2, Output. Accountant.
The financial statements of a company are the most important documents that a company produces. Investors, creditors, banks, customers, everybody reads the statements. The accounts show what a company does with its money, how profitable it is, and also how risk-worthy it is. And you can see warning signs for the future. Our stock exchanges depend on properly prepared accounts.
Trader.
I agree that the accounts of the company have a lot of information, but it's very hard to understand it all. In my job, I need to know the financial situation of a company. People interested in the stock exchanges rely on experts like me, but there are also many other sources of information. As for the accounting rules, they don't interest me or anyone else at all. That's stuff for the accountants.
Investor.
All those numbers, and I haven't got a clue what they all mean. Pages and pages of them. And apparently they are often only estimates, or they can be interpreted in one of many ways. What's the point when the accountants themselves can't agree on how to show the numbers? Most of us need a lot more information and knowledge about a company than what we get in the accounts.
Layman. Is it all really that hard? Can't we just look at the profit or loss of the company to find out how it's doing? I don't see all the fuss. Accountants are there to tell us about the numbers, and I thought that's what they do. They are trained to report these numbers, and it can't be that hard to count up everything that's happened. Managing Director.
This is exactly the problem. There are many ways to change the numbers to give a better picture. Some of my peers have been guilty of doing just that. The accountants and auditors have to take responsibility for the way that numbers are reported. Accountants and their work are extremely important. They just need to make it all a little easier to understand.
Unit 3, Exercise 1.
So, could you just go over depreciation again?
Sure. I've prepared a quick list of the different types, like you asked.
Great.
OK, let's see. Well, you know that normal accounting treatment means that a fixed asset has to be written off over its useful life. Basically, we look at the cost of the item and take away its estimated scrap value. Then we use a depreciation method to write it off.
Yes, of course. It's 5 years for computers, I think.
Right. Well, as you say, there are different ways of doing this. Let's see. Straight line, declining balance, sum of the year's digits, unit of production, hours of use. If you look at this list, you can see a description of each of these methods.
Oh, yes, I see. Yes, that's very useful.
Unit 3, Exercise 4.
We've got a few minutes to ourselves. Could you just go over it again? How is the taxation expense calculated?
OK. The operating profit minus our interest expenses gives us the profit before tax figure. This is the amount which, theoretically, is then subject to taxation. In fact, the taxation amount is just an estimate because we won't know until much later exactly how much tax we'll have to pay.
What do we do with this estimate?
In effect, we prepare an interim tax return. It won't be filed, just kept by us to justify the taxation expense we include in the P&L.
Will this also be audited?
Yes, and of course the profit after tax is the figure which we can distribute to shareholders.
What do we do when the taxable income differs from the profit before tax?
We record what happens on the balance sheet. It's either a net deferred tax asset or liability.
Unit 3, Exercise 6.
Hi, Javier. How's it going?
It's not easy, all this English. We didn't do any of this on my course.
Can I help?
Well, maybe you could clarify a couple of things. Let's see. Here we are. Provision for income taxes. What does that mean?
OK. Provision means putting money aside so that we have something to pay with later. So, provision for income taxes is talking about the current year's tax expense which will have to be paid in the future.
Like provisional.
Not exactly. Provisional just means temporary. You know, not final. Like a provisional budget. It's not the final version.
I see. And what about deferred income tax balances? What does deferred mean?
Basically, put off to another day. The income has been recognised in the accounts, but the tax owing on that income will only be realised in the future.
Oh, OK. How does that affect associated companies?
Well, it depends. Associated companies and affiliates are a special case. Deferred taxes are not normally recognised on undistributed earnings, but only if the plan is to reinvest the profits.
So if we don't invest the profits, we pay tax.
Exactly.
Unit 3, Exercise 10.
These costs clearly relate to the repair and maintenance of our machines.
But in your financial statements, you argue that this expenditure was to upgrade, and you have capitalized it all. At first glance, it appears clear that...
Excuse me, but you know as well as I do that the accounting and tax regulations allow for different definitions of what we can capitalize and what we must expense.
Yes, but it's easy to work out the type of costs you have from the descriptions in your accounts. And, based on our interpretations of the laws, this seems to be capital expenditure, which you can, of course, depreciate.
We're going to take this further. I'm afraid I can't agree with your comments.
Look, I'm sorry, but this conversation is going nowhere. I suggest you make a submission and send it to our office. We can then consider your arguments in detail.
Fine. I'll do it today. Thanks for your time.
You're welcome. Goodbye.
Bye.
Unit 4, Exercise 1.
Claude Bernot?
Hi, Claude. It's Janet. You wanted to chat?
Hi, Janet. Great, you got my message. Thanks for getting back to me so quickly.
You're welcome. How can I help?
Well, it's about your preliminary report. There are a couple of things I think we need to discuss.
Yeah, sure. No problem. I have it in front of me.
Hang on, I'll just find my notes. Okay. The first point is on page 11, third paragraph. What do you mean exactly?
Okay, let's have a look. Oh, yes. Capitalization of costs in your factories. We think that these costs should be expenses in the P&L.
But, no, sorry, I'm afraid I disagree. They were necessary for the upgrade of our plant. Surely you agree that we have to keep up with the competition?
Yes, of course, but lots of the items we tested are clearly normal repair and maintenance expenses. You can't really justify including such costs under machine upgrades.
I see it differently. Our machines have been developed to produce a wider variety of products, to improve the running efficiency of the equipment, to keep us in business. This was a sizable investment on our part. The figure we're talking about shows the commitment we've made to the future. I mean, we're going to be getting benefits from these upgrades for years. Our balance sheet should show this.
I'm sorry, these figures are too material for us to ignore. There are some expenses which...
Companies do this all the time, and I might add, their auditors accept it. I suggest you consider this again. I'm sure you'll find it's reasonable when you think about how important these investments were to this company.
All right, we'll look at these costs again. Let's move on to the next point.
Unit 4, Exercise 6. Part 1.
Have you seen the latest?
What's that, about Megacorp PLC?
Yeah. And it's not the only one. Every week there's a new scandal. It's going to change how we do our job.
How? Our role is only to give an opinion based on estimates. We can't review every little thing in detail.
Oh, come on. Investors expect financial information to be correct. And I think it's fair enough. If they find out that, I don't know, that assets have been overstated by 50%, then they're going to be annoyed. I would be too.
Part 2.
We don't overstate anything.
But we're expected to find these things. That's what we're paid to do.
Hang on a minute. Our job is to review the information provided to us by the management of a company. We have to assume that they're being honest. We're not police officers.
But...
Let me finish. Look, there are legal mechanisms to deal with people who commit fraud. The auditing profession has its own regulations, and investors trust this. It's tried and tested.
All I'm saying is that investors have a right to rely on the financial information they read, and we're paid to check exactly that. Self-regulation may not be enough, and the trend is...
I agree that it's a bit strange that we're paid by the same people who we audit, but it's always been this way, and I don't see how that can be changed. Do you?
Unit 5. Exercise 1.
I'm sorry, but the external accounts don't help me much. Doesn't matter if they're in English or Chinese. I need information from you, which will help me run this department.
What exactly would you like?
Well, for example, I need something which tells me about the profit we make on our customers, with some sort of breakdown based on the size of the company. I want to compare the money we make to the size of the customer.
Sure, we can do that. And how about the costs per customer?
Exactly. How much we spend on each customer compared to the size of their orders.
That should be possible.
Great. Also, the profit made per employee. I would like to know where we are profitable and with which employees we make our money.
You realise that this is going to be a lot of work for my department.
Yes, I know, but it's very important for me. Can I also have a complete breakdown of our overhead expenses and the allocation of them to each of the products that we sell?
OK. How would you like all this information to be presented?
In plain English, please, so that even I can understand it.
Unit 5. Exercise 7.
So, we've agreed that Sally's team will produce those figures by the end of the month. Got that?
Yeah.
Good. Okay. I'd like to move to the next item on the agenda, which is the budget for the upcoming year. Peter, would you please give a short overview of your research into the market and your conclusions?
Sure. As you all know, my department has been extensively researching the market and the economic conditions we'll be facing in the short term. It's quite clear that events of recent years have unsettled the market greatly. Both investors and consumers are convinced that it won't get better, probably for a long time. Investors are looking for solid companies, and consumers don't just throw their cash around like they used to. We think that the situation will remain like it is in the middle term. This is a time for consolidation, not expansion.
Simon, what does R&D think about this?
It's a pretty negative outlook. We've been working really hard to come up with some great ideas. And maybe now's the time to launch some of our new products.
And our investment programme has been ready to go for months. We can't just wait and hope that things get better. Our strategy has always been to lead the market, not sit back and cruise along.
Peter?
Ideas and investments don't mean cash in the bank. Consumers simply don't have the confidence to spend their money on fancy new products. And as for expansion, I think the good old days are long gone. We should be cutting back.
Sally, how do you feel about all this?
We're talking about budgets for the upcoming year. Everybody's forecasts seem to indicate hard times ahead, and we don't even have the money to spend. How are we going to service more debt or raise more cash in the capital markets?
So, despite our great ideas and investment plans, it seems the reality is that our budgets for this year will have to be tight.
Unit 6. Exercise 1.
So, can we agree at least that it will be most cost-effective to invest in an existing business? That way we will be able to utilise the local knowledge of the personnel currently running the business.
Yeah, I think so. The question is how exactly? Do we buy the company or only the assets? There's a lot to think about. For instance, the due diligence process, although that won't affect the mechanics of our acquisition. What will we have to consider, Alan? You're the international lawyer.
Lots of things. Takeover rules, European Union regulation on competition, and the accounting legislation. Dana, can you tell us something about that?
Actually, the accounting regulations aren't such a big issue. More important will be the effect of our acquisition on our balance sheet. The goodwill component is huge, and we have to be aware of the impact this is going to have. That'll be an interesting discussion with the auditors.
Ideas and investments don't mean cash in the bank. Consumers simply don't have the confidence to spend their money on fancy new products. And as for expansion, I think the good old days are long gone. We should be cutting back.
Sally, how do you feel about all this?
We're talking about budgets for the upcoming year. Everybody's forecasts seem to indicate hard times ahead, and we don't even have the money to spend. How are we going to service more debt or raise more cash in the capital markets?
So, despite our great ideas and investment plans, it seems the reality is that our budgets for this year will have to be tight.
Unit 6, Exercise 4.
If we're thinking about raising capital in overseas markets, the reporting requirements of those markets are obviously important. I've summarised some of the major points on this slide. Let's go through them briefly.
1.
It may be possible to measure all of these at their fair value, which would allow the recognition of unrealised gains.
2.
This may have been developed completely separately from the accounting systems and may provide considerable opportunities for taxation planning.
3.
Typical of these is the profit and loss account.
4.
This can be acquired or self-generated. Of course, it may have to be recognised as an asset if certain criteria are met.
5.
Here, we're talking about things which we don't actually own. They go back to their owners after a certain amount of time. They require different disclosure in the balance sheet, and the GAAP of different countries can require different classification, normally finance or operating.
6.
The methods used to measure this can vary considerably. The normal ones are FIFO, which means first in, first out, LIFO, last in, first out, or average cost, which is somewhere between the two. All give a different value for what we hold.
Unit 6, Exercise 6, Part 1.
Good morning, ladies and gentlemen. My name is Catherine Smithson. I'd like to thank you first of all for giving me the opportunity to come here today and talk to you about the international issues facing enterprises with cross-border interests. Although I am not an accountant, I hope to give you some information which will help you in your dealings abroad. If you don't mind, I would prefer to answer any questions you may have at the end. There'll be 3 parts to my presentation. I'll start with a short description of the general issues faced by managers today. Then we'll look at some of the issues in more detail using some of the data I have collected. Finally, we'll look at how you can approach these problems and create successful international teams. There'll be a comprehensive handout at the end, so there's no need to take notes unless you really want to.
Part 2.
So, what can we conclude from all this? We all know that globalization has been a buzzword for many years now. All of us have been involved in or seen companies expand across borders, and we have seen some mergers collapse. I think that my research has shown that one of the main reasons for such collapses is that management has ignored the intercultural factors facing the members of teams working in an intercultural environment. I hope my presentation has made you aware of some of the factors which affect the ability of people from different cultures to work together. I will now be happy to take any questions from the floor and perhaps even discuss some of these issues further. Yes, the gentleman on the right.